His speech at Jackson Hole, Fed Chair Jay Powell will say that the shifting balance of risk, quote, may warrant adjusting our policy stance. Policy says is in modestly restrictive territory, but the stability of the unemployment rate right now allows the Fed to proceed carefully. It's a lot of this but that in this speech. The inflation risks are to the upside, but employment risks are to the downside. With these goals in tension, the Fed will take a balanced approach to the dual mandate. Let's talk about on tariffs and inflation, later on jobs. On tariffs, he says higher tariffs have begun to push up prices in some categories. He sees a 2.9% core PCE for July. That's up a tenth from June. He notes that there's a notable increase in goods, downward inflation in housing, and non-housing services, a key factor for him, have been a bit high. The effects on tariff consumer prices are, quote, now clearly visible. He expects them to accumulate over the coming months. However, a reasonable base case is the tariff effects, quote, will be relatively short-lived. Will continue to take time, however, for the tariffs to work their way through supply chains. Let's talk about what he says about the job markets. Paul just talked about this. The slowdown in job growth, he says, is much larger than previously believed, noting the big revisions downward recently. But the job growth slowdown has not created large slack in the labor market for the Fed to worry about immediately. Other labor market indicators have softened only modestly. And this is key right here. The break-even rate, the rate that is required to keep the unemployment rate stable, he says has been sharply lowered because of immigration policies. The labor market is in a, quote, curious kind of balance with both slowing in supply and the demand for workers. The risk to the labor market, however, can quickly create sharply higher layoffs and unemployment, something that looks to put them on guard when it comes to the rate level. Growth has slowed notably, he says, in the first half. Quick section, they adopted the new long-term strategy, something they do every 5 years, and there have been some changes in it. We're going to go right now to Jay.